You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venanzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. Usually that's the music you hear. If you're listening live, there's no music today because we're coming at you not from our studio in Chicago, no, but from the road studio, the Southern studio, as we like to say here every year for our annual sojourn here to the South. Looks like the weather's holding up. Seems like whenever I do these shows in the South, it's always just thunderstorm central. But at least for now, fingers crossed, at least for now, the weather is holding up. My name is Mark Longo from theoptionsinsider.com. The brand spanking new, I should say, theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hope you guys are liking what you're hearing on the old network. Don't worry, the regular slate of shows will be coming your way, regardless of where we are. The audio never stops. We never sleep. The train keeps on rolling, listeners, including the live stream of the Option Block coming at you here today on Thursday, 1 p.m. Eastern, quoting the old Eastern time. That's the time zone I'm in today. I know Mr. Rocklauser puts a smile on his face. He lives in Eastern. We live in the one true time zone, of course, Central. But this week we'll be all Eastern all the time. And, of course, hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. And joining me on the program today, Uncle Mike on assignment, a rare assignment for that guy. He's out traveling hither and yon. We'll get him back next week. But holding down the Fidelity hot seat, none other than the last emperor himself, back because he just likes being called the last emperor, I think. But he's back nonetheless. Constantine Vrandopoulos from the Active Trader Strategy Desk over there at Fidelity. Mr. Constantine, Mr. Last Emperor, welcome back to the program, sir.
Thank you very much, Mark. Excited to be here. I just wanted to say that since you are in Florida this week, get used to the afternoon showers. It happens every single day since I'm in Jacksonville, Florida here.
Oh, that's true.
We actually had a pretty rough drought spell for a couple of weeks, and the rain came back, and it seems like it's been raining every single day for the past 10 days. So I guess that's the normal. Hopefully you won't get rained on, for the extent of the period of time you're staying here. But Get used to it.
It already poured yesterday. It's kind of those, you can set your watch by it almost, right? It's pretty much around 3 to 4 p.m. You gotta be indoors because it's coming.
That's right.
Jacksonville, I believe, was it the largest city by landmass in the U.S.? Something crazy like that. A little nugget, little factoid. I learned that last year from the OIC conference. We were down there in Amelia Island. Who would have guessed Jacksonville? But Jacksonville, apparently a sprawling mecca by all senses of the word. And then let's move up the coast a little bit to a place probably a little less sprawling, a little more open, and a little less population dense. Yes, I'm talking about Maine. And who knows where exactly in Maine he is. All we know, he's on the coast. He doesn't reveal his locations, undisclosed, so he can have his privacy, as the Brits like. We are talking to the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. By way of Carmen Line Capital, Mr. G, welcome back to the program, sir.
It is a pleasure to be here, and I think the Viceroy, his name has now been usurped in the annals by the last emperor.
Yeah, I guess
how are you gonna top the last emperor for a nickname?
An emperor does kind of outrank a viceroy, I think, in the military hierarchy. Yes.
Emperors, I think, roundly spank viceroys on a weekly basis. Although maybe we might have to cut that as well. So,
of course, on the flip side, I don't know if they have the same jaunty caps that the viceroy used to wear. So
the emperor hats are quite large. They're quite large.
Alex is listening right now somewhere saying, "Oh man, I've been usurped." So don't worry, we'll have to get the viceroy back on so they can duke it out in terms of titles. Meanwhile, it's time for us to duke it out right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down, surprise, surprise, what the heck is trading out there. And coming into showtime, we are seeing some interesting stuff across the broad spectrum of the space. If you want to talk about commodities and crude oil attacks on tankers and everything, stay tuned. That's in about an hour and a half or so when we're coming up on TWIFO. But right now, coming on in here to showtime on the old option block, we're continuing the love, continuing the green on the screen out there in the broad market. Most of the major indices up, not quite as strong as they have been in previous sessions, not quite 1.5%, anything like that, but still firmly, robustly in the green today. We're seeing NASDAQ leading the charge yet again, up about 0.5%, and then we're seeing S&P and the Dow up about 1/3 of a percentage point or so for both of those. So roughly equal footing out there. And our old friend VIX Cash feeling pretty glued to my prognostication from last week on volatility views. I was picking it not too far from these levels, and it does remain remarkably sticky out here. We've been talking on vol views for a while about how that VIX curve is kind of flat. It kind of shows that the market is saying, we don't know how the hell things are going, but we're gonna keep it here for a while until we do figure that out. And that's kind of what we're seeing in the broad volatility space. VIX Cash staying pretty glued around the 16 handle, maybe at 16.25 to the upside, dripping below. Now it's a little bit below, about 1570 to the downside. So it's coming off it a bit, but still right around, hovering around in that vicinity of the 16 handle. And doesn't seem to want to go anywhere anytime soon because, like I said, a lot of other shoes still waiting to drop out there in the marketplace. Since we're talking vol, let's start with you, Mr. Rock Lobster. I've been hearing this degree of fixation with the VIX maybe causing a little consternation with the old Rock Lobster newsletter. Is that the case, sir?
It is causing me some consternation and turning really nice trades into quite just blah, nothing. So we had an idea where, you sell an Iron Condor and close the Iron Condor last week, made some money on that and we're long some VIX strangles against it. And last week we were at the option, at the Trader Summit. The trade was up a little money and okay, balls up. We should see like a 14 VIX or something, and nothing. So basically our Iron Condors just paid for our VIX strangles and now we have no money. We didn't make any money. And I'm trying to remember the last time, I'm talking to Thompson boys, trading back and forth on Twitter, okay, when was the last time we had this kind of a rally in the SPX and VIX didn't drop? And I don't know if there's been another time, to be honest. at least what I'll call in the modern VIX era since, the mid 2000s or something. So really odd pricing action. The market literally is, at least from what I can see, is everybody's betting on a rate cut, and I have no idea what vol is going to look like or the price of a strangle is going to look like before the July Fed announcement, because I don't think it's going to happen in June, but it might happen in July. They are building a tremendous amount into that. So, I think a lot of short-term juice is going to rot away between now and June 26th. We've got no earnings. We can have the occasional tweet thing happening. But, you've got, if you look at kind of the term structure, I believe, so when I say term structure, you're looking at the volatility from right now till then. So you got a crazy curve in the term structure till July. So you got like 14 volatility about a month out, and you got like 10 volatility in the short term. So the market's like, okay, well, not much is going to happen. Right, the June 17, although it's a Monday expiry, so you're seeing like 12. So you're seeing a downward sloping curve for volatility with a 16 VIX, which normally you have a 16 VIX and you have an upward sloping front curve. And if all that is totally confusing, it is the nature of how vol trades. Basically, market thinks it's moving. Short-term vol is going to be higher than back month vol. And right now, it's kind of like you got some funky inversion going on. We have relatively high absolute vol a month out and lower vol in the front because the market basically doesn't think anything's going to move in the near term. Really, really screwy condition. And basically for somebody like me, it's like, okay, I just buy like 1x2 put spreads or some goofy crap like that to try to sell some juice. But other than that, I'm like, I don't have a vol product trade because this is kind of in the place where vol product ideas go to die. It's like there's no real edge anywhere. And, this is where you can get lulled into selling options in a vol product, because even 16 vol, that's kind of saying you're on a knife edge in case something sort of yucky happens. So it's hard to sell it. You really can't buy it because the slope of the curve basically says SPX isn't going to move a whole lot in the short term. So it's kind of you look at the vol products, you go there, they look beautiful and fantastic, and I'm not getting anywhere near them because they're just a very difficult trade at this point. So, but I think a lot of that has to do with the shape of the SPX curve and the options. So I see that and I say, no, danger, Andrew, just stay away from that curve in the products. And my lovely trade that I had that was up pretty decent money is going to be a big, fat, making no money trade, most likely. So it's rare that you buy some strangles at the 16, 17 handle in VIX, and they're going to go to about nothing. And that looks like about where they're going to go right now.
Gotta love being in that place, right? Where it's too rich to buy it. You sure as hell don't want to sell it. You're right. It's kind of like there's not much you can do there. The zone where good trading goes to die.
I don't even have a zone for that.
Yeah, you need one. You need to add one to your zones.
Yes.
Curious what your thoughts are in terms of the rally, right? So the equity markets rallied last week, and obviously it was on the sort of dovish stance or the anticipation of a rate cut. On my last check, the Fed funds futures are trading as if the July is a done deal. It's close to 90% right now. The expectations are there. Do you think it's just the sort of circumstance of going into June 19th, given the fact that there is a Fed presser at 2:30 that day, and obviously, June 18th is the last day to trade. These options is just a case of people not taking off their hedges before the announcement actually happens because, hey, just in case. And maybe that vol crush that you were actually expecting or the volatility move in one direction or the other is actually going to happen right after the announcement?
I think because since VIX is the 30-day forward number, so the VIX options are all in July. So yeah, nobody's taking that stuff off. I think that's definitely part of it. Also, the liquidity providers, the rally was so hard, they basically dragged the curve all the way up. So there wasn't that normal relief involved. So yeah, I think definitely part of it could be, why sell those options now when, we don't have a definite, even though the delta is really high on the rate cut. The market hates uncertainty, and even though there's a high delta, it's not like 100% done. And I think that's why the vol's staying there. And you have one tweet on China, and where does SPX go? One thing we're done dealing with those guys. SPX is down another 75 or 100 points. So I think that's why the back end hasn't come down, much to my consternation on. And another thing too is they're not selling hedges, but people aren't selling calls either. Usually, the big crusher would be, all right, you're gonna have funds are gonna sell 2950s or 3000s or something, so the liquidity provider can provide a back spread type trade, because they're long a bunch of calls, they sell a bunch of futures against it, and then they just crush everything else because they're long so much gamma. You don't have, and I don't think that's happening either. So I think that's why the vol's up. And I'm trying to remember the last time it happened. I'm just thinking in the SPX in the mid 90s when we had that whole tech rally, it was just going totally insane. It's the last time I think we just had those runaway rallies where the vol just went with it. And so, yeah, definitely it's part of it. People aren't getting rid of the July, but as far as June VIX, I mean, that stuff is dead. It feels like it's dead at this point because they're not letting those July options are out on the cash move. That's it.
Yeah.
I hope I answered that question.
when I was out in the SPX, yeah. it was the late 90s, and there were a few upside crashes in that time. So you're right. That might be the last time we had, that was a more sustained event than this, at least for the time being, or this is kind of more of a weekly aberration. We'll see if it's sustained. By the way, maybe we need to add something to your zones, Mr. Rocklass. Maybe we need to add a velocity of zone change. What do you think?
We could like a gamma zone gamma, or just the unhappy zone.
Because then we can add. Then we can also add more descriptive terms like the stuck zone. We're stuck. We're stuck at the monk kind of thing. We're stuck in the monk this week, listeners. You can add all sorts of flavors. See, I'm just giving you gold here, sir. You could run with it how you like, but I'm literally printing money for you. It's up to you whether you like to pick it up or not.
As you have for many years.
Yes.
Many years.
Yes. The magical touch that prints money for all. Mr. Constantine, Mr. Last Emperor, sir. That was a good question about the volatility. See, it shows you're listening. It shows you're paying attention. We don't just call you the Last Emperor for nothing there. Not because your name sounds like it, even though it does. But obviously, this is an interesting time. You were saying before the show that it's kind of nice. A sustained rally does make the folks on the other end of the Fidelity phone a little bit happier, let's just say. What is catching your eye? What is lighting up the tape? What are the Fidelity folks up to over there these days, sir?
Most definitely. Last time I was on the show, we were, I believe that Mark was on, and we were talking about the VIX curve and the S&P kind of oscillating right on that 2,800 mark. And obviously, you had the notice come out of the White House regarding the Mexican tariffs potential, and the market dropped. So you had a pretty precipitous drop into or sub that 2,800 level, went to 2,700 pretty much in a straight line. And we talked about the fact that the longer the price continues to be accepted underneath that 2,800 level, right, the more potential short-term headwinds there are going to be. And what do you know, right? I mean, we took 1 week to get back out of that level, from 2,700, pretty much a straight line right to 2,900. And now we're kind of oscillating here in anticipation of next week. But it provided a lot of relief, especially to those who got, short a lot of premium on their bullish trades. So it's one of the things that I always point out to the clients that I speak with, that you have to kind of prepare yourself, right, for these sorts of moves. Because if you don't have a risk management technique and you get caught in a very fast drawdown, if you have a bullish outlook on the underlying, you need to have the ability, right, to withstand those losses. A lot of people are obviously very relieved that it came right back, so the markets gave them a pretty good mulligan this time, but taught a lot of people a good lesson for the future, I think. What's lighting up the tape here? We have, four names just top of the rank here. So Beyond Meat, I talked about it last time I was on the show, kind of continues to humble shorts. Last time I was on the show, pretty sure I remember telling you guys that it was around 74.5% annualized borrow rate here at Fidelity if you can find shares. I checked this morning. That rate is at 99% currently. So, there clearly is or continues to be demand for that side, but, not a whole lot of shares to go around. And this is an interesting name because, kind of defies right now the logic of options trading. We normally talk about this, occurrence of volatility crush in options post earnings. Well, this name is definitely defying those odds, right? You had implied volatility going into the event at around 30-day implied vol was around 110. It has not budged at all, and I don't blame it, right? Because the stock went from 100 to 185 and now is trading at 145 with implied vol looking out 30 days of around 115. So the implied volatility is not budging at all. As long as those shares are going to continue to be hard to borrow, you're going to continue to see that increased put skew, especially the further out you go. So yeah, a wonky option chain, and definitely a name that moves around. So it is being traded by Fidelity clients right now, kind of at the even rate on the equity side, 50-50 give or take. The second one I want to mention is, we continue to talk about these IPOs, and after the Lyft debacle and then, Uber's not such perfect pricing, I would say, probably, right? Or at least the way the markets took those two, given their size, was not really positive. And then, you had Beyond Meat, and then yesterday you had CrowdStrike, right? So that's another name that is definitely being traded by Fidelity customers right now, up 16% on the day. Definitely skewed to the buy side here by Fidelity clients, around 66% buys to 34 sells. That's a name that, was pricing at 28.30, I believe, 28 to $30 range. And, hit 67 yesterday, I believe, on the high. Just a little bit earlier, I was checking the high on the day, and it looks like it was challenging that high from yesterday. It's currently trading actually 67.25. So there you have it, right? Another, I guess you would look at it from the short-term perspective, a successful IPO, and you have another one coming. I think Chewy, that kind of pets online grocery store, right, for all treats and things of that nature, is going to be coming IPO tomorrow. So that's something to be on the lookout for. Now, the two other names that don't often make the list, Lululemon. I was talking to some of our clients yesterday, and we were discussing the expected move on Lulu. Lulu was a pretty good performer this year. Year to date, I think it was up 45% going into the announcement. Obviously, a name that moves a whole lot on earnings. If you look at a chart and you add the earnings indicator to your chart, you're going to see a lot of gaps. It moves in both directions, up and down, and there it was, kind of challenging the all-time highs going into the event. The market was pricing in a $17 straddle with 2 days to go, and this is a perfect example of volatility crush post earnings and premium sellers really basking in their glory, right? I looked at the option chain pretty much across the board. It didn't matter what strike, it didn't matter what expiration you were looking at. But all options were down significantly, anywhere from 80, 90% to 25 to 30% going out 60 to 90 days. A pure volatility crush. I think IV30 went from 54 to 30. And if you were an extremely nimble bull and you were trading calls long, you had a chance probably to get out at a pretty decent profit this morning. Stock actually rallied all the way to 181 on the highs. 182.89 was the high. Gave it all up, trading at 174 right now, up only a measly 2%, even though you have a parade of analysts upgrading the name or their price targets at least, them beating earnings by a wide margin. And then the last name that is showing up on the list, guys, is AMD. And AMD is another one that has been very hot, right, over the past 10 days or so. A strong trending rally to the upside from the end of May, from May 22nd to the peak that it just hit here on July 7th. It was up 31%. And one of the things that I look at when I see moves of this magnitude, obviously, is there any resistance that we could point a finger towards where the stock has been before? And what do you know, right? I mean, it was trading at those levels of 34, 33 just last summer in the month of September before, it gave up half of its equity. So, it got up there very quickly, challenged those highs at 34 and kind of sold off. And it all happened on substantial volume. I do this little trick for those of you who are following along on your platforms at home. Kind of look at volume in an old school way, not only, the daily volume that the stock is trading, but also, applying an average. So look back period of about a month. How many shares has AMD traded? And I do a moving average envelope. So I want to see, what are the days when the stock is trading on maybe 25% or more than its average 1 month sort of continuous volume. And there's been, quite a few days in the past 10 days where it was just breaking out, up to those previous highs on a ton of volume. Right now, consolidating a little bit, giving up some of that steam, but that would be a name that I definitely would be watching, especially around the 33.5, 34 handle there. That's about it on the Fidelity side, guys.
Sounds like Fidelity clients, would you say they have IPO fever? Mr. Last Emperor there. They're just beyond meat, Uber, Lyft. They can't get enough of IPOs over there, it sounds like.
That's right. I mean, those are the names right now. They're definitely, top 5 every single day. So we'll see how it all works out. I mean, obviously some were successful, like Beyond Meat, CrowdStrike right now, but others like, Lyft and Uber haven't seen their opening print highs yet. So.
Yeah, it seems like every time I pull up Beyond, it's 20 handles different from the last time I pulled it up. It's got a 20 handle swing. Today's a comparatively mild day. It's only up 3 1/4, right around 145 right now. No 20 plus handle swings in either direction. By the way, they announced the Beyond 2.0. Have you had a Beyond burger yet, Mr. Last Emperor?
I have not. I definitely looked at a couple of their products in the grocery store. They didn't have the burger patties. They just had the sausage, and it didn't look very appealing to me. So
yeah, I've had the burgers. I've yet to delve into the brats, as they call them. But if they're like the burgers, I can't imagine. It's different. A burger, you can kind of disguise it, with ketchup and mustard and things, and you can kind of cover it up with a bun. The brat's got to stand on its own, right? So it's a little. I haven't made that leap yet, but maybe that's next. I'm kind of curious. And now they have Beyond 2.0, so supposedly it's even meatier. So there we go. All you folks out there who are diehard carnivores like myself, who may be looking for a new option out there, a less meat-intensive option. Maybe that's the one for you. Speaking of top 5s like you were before, Mr. Constantine, let's see what's lighting up the volume-wise out here in the market today. Like we mentioned, a decent up day, but not huge. And we're kind of seeing similar levels for the broad indices. VIX itself coming into showtime right around 250,000 contracts on the tape. So not a ton. ADV is about 70,000. Doesn't seem like it's going to hit that today. SPY, same deal. ADVs right around 3 million. They were pushing close to 1 million on the tape, so about a third. That seems to be kind of the case across the board. SPX about 1.2 million. They were pushing about 350,000 coming into showtime. The Qs also around 1.2 million and ADV, and they're doing about a little north of 250,000 there. And Russell, IWM, they're averaging about 250,000 contracts a day. They're doing about 110 or so coming into showtime. So most of the indexes were at or around a quarter to a half of their ADV or a quarter to a third of their ADV coming to showtime. Doesn't seem like we're going to be light up the tape there. Let's see what's dominating the tape on the old equity options, the places you guys are slinging. We know it's dominating the Fidelity tape, which is Beyond and Uber and all that stuff. Let's see if those are dominating the broad tape as well. Number 10 on the top 10 here. Let's start from the bottom. Good old Baba back up again there. 91,000 on the tape. Number 9, Amazon, 106,000 in a tie for 9/8 with Netflix, also 106,000. Number 7, GE, 107,000. So it's a tight race for the bottom here. Number 6, Lulu, the aforementioned Lulu. They have the sheer yoga pants infamy with, what do we got, 108,000. Number 5, Facebook, 120,000. Number 4, Tesla, I believe it's pronounced, 163,000. Number 3, AMD, 214 on the tape. Number 2, numero dos, Apple, 237,000. Bumping Apple off the top spot today is Disney, 238,000 contracts on the tape today. Let's see, the most biased looks like it might be Diz, 85%. I'll have to see what's going on out there. I don't see an ex-div marking out there, so it's not ex-div right now, which would account for if there'd be a lot of call paper out there. But 85% bias to the call side. Let's look really quickly and see where our friend Diz is trading right now. Maybe there's, let's see. Oh, it's up nearly 6 handles, 4.25%. I don't know what the new, maybe they got an upgrade, what the news is out here on Diz. I don't know. Morgan Stanley
upgrade today.
Morgan Stanley boosted it. Yeah, there we go. So there's analysts. There we go. Some analysts woke up to the fact that, hey, Disney owns all media on the planet. We should upgrade them. And the stock.
Hats off to Mark's call on this one, right? Wasn't a month ago or so he was saying that this was kind of his pick when it was getting up to those 140 levels last time. I mean, look at this, right? Post earnings, kind of testing the previous highs.
Yeah, there you go. Disney, they own pretty much the entire catalog of human entertainment. And, hey, we're down here not too far from the Disney parks, and I could testify from the fact that those things are pretty freaking full. So they're doing pretty well over there. Yeah, they got down to recently in the last month, 131.5 back in late May, and ever since then, they've kind of been on a run, about a nice 10-handle run of late. So things looking good in Diz land. Let's see what else is looking good, or maybe not so good, as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what's weird, what's wild, what's whimsical coming across our tape today here on the old optionsinsider.com. Let's kick things off. We like to do these kind of live analysis, live reads, see what our tape is kicking at, what our scanner is kicking back to us live here on the show. And let's start off here. We like to go obscure here. That's kind of what makes the Odd Block fun. We're going to kick things off in a name I know you guys all love, you guys all trade. Huge name for all of you to pay attention to. Yes, you know it. As soon as I said it, I'm going Tellurian. Tellurian, ticker symbol TELL, T-E-L-L. This one's trading $7.88 on the NASDAQ. Coming to showtime, they're up about 60 cents or nearly 8%. So a good day here for Tellurian. The name like that price level, I'm going to guess there's some sort of biotech pharma name, but we shall see. Looking back at the chart for the past year, they were trading $12 a year ago, so they're a wee bit off that Then they vacillated. Looks like they got down to around 6 or a little bit shy of that. That was back in January or late, maybe around Christmas Eve here. Looks late December, early January in that time frame. They hit their nadir. Then they kind of rebounded like the rest of the market, got up to about 11 again. It looks like that was about late May and or mid. Actually, it looks like about April. And then they kind of sold off again, back down to about 7 where they were until this morning. So that is certainly in keeping with a lot of biotechs, a lot of peaks and troughs on the chart, a lot of volatility, and that's kind of what you think here. So all that slinging, I'm going to guess, usually we're talking these cheapy names, if they're a biotech or whatever the heck they are, usually is talking some call love. Let's see what we saw out here. That doesn't appear to be the case today. Not weeklies, though, not even front month. It was October. It looks like the OCT10 calls lighting it up for 65 cents, 5,000 times. Again, kind of a quiet day out there. 5,000, actually one of the bigger trades going up out there today, listeners, let alone in an illiquid name. 65 cents, this market was 50 cents at 65 when these went up, so lifting the offer aggressively. Let's see, this was opening. Earnings are on the 7th of August, so there is some earnings juice baked in there, even though it's not exactly an earnings month. So 65 cents for the 10s. Looks like, Mr. Rock Lobster, we got someone taking a flyer saying, this thing has broken through the 10 handle several times, including just a couple of months ago. So maybe we could do it again. He's given himself till October for it to happen. But I also know that you take a bit of a dim view of paying not quite 10% of the value of the stock, but pretty close for a call that goes out to October. How does this fit on the Rock Lobster savvy scale, sir?
I was just looking at this one. This is like one of those kind of tough ones because, I was just looking. It's some sort of natural gas company. Who knows?
Oh, it's not a biotech. Okay, we had the chart of a biotech.
I thought it was too. I thought, biotech, 65 cents.
Exactly.
That's nothing.
Exactly.
But no, when you think about it, if you can export LNG, it might as well be maybe potentially a biotech. So, my kind of rule for buying calls is it's easy for me to buy calls in a stock that's been there before. So, the stock was 11.5. The 10 level calls are 65 cents in October. I like that better than buying the June 10s and I think some Julys went up as well, 7,000 of those. I think somebody's rolling them.
Yeah, he bought the 10s. He bought the 10s and the weeklies. There we go. Super savvy.
Exactly. I'm going to buy those. So, this could be what I find interesting, like natural gas, oil, like this whole sector. I feel like kind of, everybody makes fun of the AOC Green New Deal or whatever, but I think what you have seen is, a lot of big petroleum companies, the stock prices are in the basement. Exxon is $74. I'm trying to remember the last time it was that low. And I know oil's only $51 a barrel, so it moves with all that stuff. But even a stock like this, I think maybe somebody looking, okay, gas is greener, natural gas is greener, so it looks like somebody's looking for a bit of a bounce there. So, it's a specky call, but I've seen worse specky calls, and to be honest, the call's up on the same day you buy it, so it can't be that bad.
Yeah, you can't hold that against, and that explains why the stock's popping today. LNG shippers, all those tanker attacks out there in Iran. Obviously, these guys probably getting a little bit of lift off that as well. Crude's obviously up today as well, so that makes more sense why they, as opposed to a biotech or a pharma, would be up today. Interesting stuff out there, and you're right. Hey, the calls are working in his favor. He gave himself till October, so not the most outlandish call upside love trade we've seen. Tell you what, Mr. Rocklop. So let's do this. How about this? This will make you happy. It'll make the crowd happy. We're going to mark these guys down. We're going to say these guys are to be watched. And we shall return to our friend here in Tell at some undisclosed date in the future between now and OC expiration to see how it works out. How you like them apples, Mr. Rock Lobster?
I think that's reasonable. That's a reasonable move.
No one ever said we were not reasonable here on the show. Crazy, outlandish, certainly, but also reasonable on occasion. So how about this, Mr. Rocklap? So let's say $7 and change, $7.80 or so. Too cheap for you. You want a little bit more juice? You want a little bit more meat on the bone? I got you covered. How's $16 around that low? How's that sound for you? How's that? That's what I got for you next here. We've got, I know as soon as I said that, you knew exactly where I was going. You said he's going to EQT, and of course I am. EQT Corporation. Ticker symbol, appropriately enough, ZZX. No, I'm kidding. It's EQT. I like an appropriate ticker. Mr. Rock Lobster knows that as well. A bit of a pet peeve of mine. Today, $15.88, up 11 cents, so not quite 1%. This is another one that's had kind of an interesting year here. A year ago, they were pretty much double. They were about $30, and they kind of hovered in that range for most of last summer. Then the end of the summer into September, they started selling off, got down to around 25. And looks like they took a big hit in around October, which, go figure. Everyone took a big hit in October, right? Went from about 25 down to, looks like about, on this chart, again, kind of hard to read with the legend here, but looks like around 18 or so, and kind of vacillated in that 18 to low 20s range for pretty much ever since, until recently when they started selling off again, back down to around the 15 handle and change. So they're kind of on the nadir of their 52-week range. So I'm going to guess that probably means that opens them up some call up, but you never know. Let's see what we got here. Yes, EQT today. It was July 17 calls, lighting it up 4,000 times for 47 cents, actually through the offer. This one went up 30. They were at 35 cents at 45 when this trade went up. Someone swept these on the Philly for 2 cents through the offer 4,000 times. Again, not exactly surprising. Those posted markets listeners are certainly not good for 4,000 in a name like EQT. You got to go through it a little bit to get yourself done sometimes, and that's pretty much what we saw here. There are earnings, but not this month. Not this cycle, I should say. They are in July, but they're the 25th. They're after expiration. So these calls not going to have the earnings juice. Kind of interesting. Maybe he wanted to avoid that to pay a little bit cheaper, but he obviously didn't want to go through the earnings event. So he bought himself 4,000 July 17. Let's go back and look really quickly at that chart. 17 is an interesting level. I mean, again, we're at about 16 now, so they're not that far off the mark. And it has traded nearly double that just in the past year, Mr. Rock Lobster. It seems like we got a twofer here, Mr. Rock Lobster. People taking upside flyers. This guy not going quite as far as October, going out to July. I'm guessing you like these a little bit less and paying up to do it, too, paying through the offer. Is this one less high on the Rock Lobster savvy scale, sir?
It's less high on the savvy scale, but it's more high on the, will EQT get taken over scale? So
that is true. That is true. He's betting on something happening in the next month or so.
As a to-be watcher, this is sort of, you look at this kind of stuff and like kind of real estate, what is this, some sort of residential equity real estate thingy, where like, why do you go out and you buy those calls? Okay. Oh, no, I am totally wrong. This is more natural gas. So maybe we have a theme.
Uh-oh, I'm sensing a theme here, sir.
I could have sworn there was a real estate, like some sort of real estate REIT that was EQT, but I could be wrong on that. Clearly I'm wrong on that, at least with this one right now. So it's got the right name for you. That makes you happy. So you don't have to think very much. But I just, same as before, okay, why is everybody buying gas? Are they worried? Are they taking a flyer on the Straits of Hormuz closing down? Something like weird like that. Which I would say that the volatility in USO is very, very inexpensive, by the way. Relative. It's been cheaper, but it's not that much. I'm looking at October strangles, actually, as we speak. So, yes, I think people are now, I'm going to flip totally and say the theme is, okay, we're going to buy gas. We're going to buy a squeeze in oil in case something actually nasty happens with Iran, which I hope it does not. But they seem to be launching missiles at people and torpedoes and crap like that. So I don't think that's a really good long-term plan.
Explosives and volatility tend to be good bedfellows there. Once you start blowing things up, the vol tends to come. Go figure how that works. And certainly in this case, some upside. You're right, 2 for 2 here. Let's see if we can keep the streak alive. And I'll also put that one in the to be watched category. Though I have a feeling once these tensions settle out, they'll close these bad boys out, but we shall see. And then, Mr. Rocklops, I know what you're saying. You're saying, okay, he already talked EQT. He already talked our other friend here, which is Tell. So the third pillar of that trifecta, when I make those two, it's going to be Gilpy, right? You knew that. You knew that was coming. Everyone knows that. That's pretty much the three everyone has on the tip of their tongues when they wake up in the morning, right? Gilpy. This is, of course, everyone knows, Gaming and Leisure Properties, Inc. Ticker symbol Gilpy, GLPI. Trading coming into showtime, about 39.5, off about 12 cents or so. As the name implies, this is a gaming and leisure name. At least their name is descriptive. That's nice. That helps. That helps with the analysis, sir. No, I'm gonna guess they're not in the LNG business, but you never know. Maybe they diversified since we've checked them out. Let's see. Looking at a chart here for Gilpy, they were trading about $35 a year ago. So a wee bit south of where they are right now. And they kind of hovered in that 35 range for quite some time. Beginning of the year, late last year, when everyone kind of hit their nadir, they kind of did too. And they were down to, looks like around, not that much lower, about 32 and change. So this one hasn't had a huge range this year. And then it gapped up recently up to 40. That's kind of the high. And now it's kind of been hovering in this 40, 39.5 range for the last couple of weeks up here. So not exactly a huge mover. When it does move, it seems like it tends to stick. Sounds like it might be a good name for some overwriting. Let's see what we got here, or maybe some love. Let's see. We got. Let's see. I'm more on a name like this. You kind of want to harvest some premium, but we shall see what we got. Let's see. Gilpy today. We saw the July 40s going up for 50 cents. They were 45 cents at 70. So a little bit wider than your traditional SPY and Apple markets listeners. 45 cents at 70, went up for 50 cents, so a nickel off the offer. It seems like I was right. Looks like we got a wee bit of the old harvesting of the risk premium. And the 40 calls, so at the money, 2,261 times going up there. Harvesting the risk premium, Mr. Rock Lobster. I'm not mad at this one. There are earnings here. Let's see, July 31st. So also earnings after this name. So he doesn't have any earnings risk and also no earnings premium in this name here. Taking 50 cents off the table on a $40 stock that tends to stick. I don't know, Mr. Rock Lobster, I'm not hating this one, and it sounds like if it breaks through 40, which is, pretty much a 52-week high, he's not upset about dumping this one. What do you think?
I'm thinking this is definitely premium harvesting. I looked at this name. I used to trade PENN, some obscure gaming stock way back when. And it looks like they must have spun their property out. At least this is like the company that owns it and leases it back to the parent or something like that. So it's one of those, right calls against it. It generates some money, but not very much. Doesn't grow very much. All that kind of stuff. Just owns a bunch of land and all that kind of crap. So it's a good, it's a REIT, and a lot of REIT people do the the old wheel type trade, sell the puts, take delivery, sell the call, and try to generate a couple more bucks out of it that way. So that's what it looks like on this one. Certainly it feels like very opposite paper of the two gas companies that we were looking at before.
Yeah, taking a little bit of the old risk premium, harvesting it, and if they get called away, it doesn't sound like they're too upset. They're selling it pretty much at the 52-week high, and if not, they got 50 cents in their pocket to cushion the blow. This is the kind of name you want to do those kind of trades in, listeners, where there's kind of sticky, the chances of blowing up to the upside in the near term. He's not going out too far either. He's going out about a month or so. So seems like not a bad one. You don't need to watch that one, but we'll watch the other two to see what's going on in LNG. Meanwhile, it's time for us to keep on rolling. It's Thursday. It's time for your questions with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where you guys take the reins, questions, comments, insights, pearls of wisdom, hate mail for the Rock Lobster, all that good stuff. We welcome it all. Maybe not the latter, but you can send that to him directly. But instead, let's get on in. We touched on last week what you guys loved with the Bitcoin poll we had last week, and clearly the 8,000 put won because it broke through 8,000 not too long after we posted that, but it wasn't as demonstrable as you might think. It was pretty much roughly a third almost for each of the buy 9,000 calls, buy 8,000 puts, and the sell 8,000 puts. Roughly 5 to 7% for other with your iron condors and flies and all that good stuff. But I thought the put would be a little bit more dominant given the fact that kind of broke those lows, but it kind of shows how volatile Bitcoin has been lately. It threatened 9,000 shortly after our poll, then broke 8,000 not that long after that. So kind of all answers were right for a very brief period there, which kind of is what makes it fun. Let's go on here now. Mr. Last Emperor, last show, I believe, was it, well, I don't think it was Trey. It was, I'm blanking on who he was, but we had a deep discussion on box spreads. Did you catch that, Mr. Last Emperor, on the last show?
I did not. It probably was Colin.
Yes, it was
I
Colin.
guess.
You are correct. Yes, it was Colin. And yes, he brought, and I said box spreads. Retail guys want to know about box spread. It just seemed anathema to me. It seemed strange. It's not really a very retail friendly trade, and yet apparently people have a lot to say about box spreads. Go figure. Because after we posted that show, people are hitting us up with all kinds of stuff, including a bunch of them like Chinook here. And he wrote in saying, "Hey, I'm listening to the option block, and the mention of boxes reminded me of a Reddit user, Irony Man, who bragged about his, quote, riskless trade on Robinhood. That trade aftermath caused Robinhood to ban boxes. I'm not sure how it ultimately resolved. He said, here's the highlights, and he sent us a link to this deep thread. It's been going on for a while, apparently, on Reddit. I'm not a big Reddit user myself, listeners. I don't tend to lurk there, but this thread was kind of fascinating here, just to see. Yeah, apparently someone was on there. Guy's name Irony Man. I'll give you the highlights here because I kind of perused this lengthy thread here. But Mr. Rock Lobster, are you falling off your chair, sir? Are you okay?
Oh, I'm sorry.
There you go. There you go. That's better.
I keep forgetting where my mic is sometimes.
It sounds like this Irony Man could use a little option pit help, sir. Irony Man, so this is the summary of it. It said, Irony Man came up with what he thought was a genius strategy to get free money via options trading in this thread. And they said the people here at this Wall Street Bets thread that he was in were mixed. Some of them thought it was genius. Others, however, actually understood what they were talking about and strongly advised against this strategy. Less than a week later, this thread pops up from the same guy with the results mentioned in my title, almost a 2,000% loss. It doesn't stop there, though. Around the same time, Robinhood sent an email notification out to users that the trading strategy used by Irony Man was no longer being supported by the app, with a strong possibility of his loss being the direct cause. But it gets more interesting. Robinhood may be legally liable for the losses due to some of their actions / lack of actions. And now the entire subreddit is exploding with memes and quality posts about the entire situation. And the latest news is that Irony Man has been contacted by MarketWatch. They want to interview him about his losses. Who knows where it goes from there. And then there's a whole deep thread discussion about it with responses. I can tell how people in the responses don't really know what a box is, but yeah, it sounds like this guy ended up saying, hey, I'm going to do this quote-unquote riskless trade. Here's the headline is, user managed to lose $57,989.57 on a $3,000 investment. And so apparently he thought he had stumbled onto some sort of the magic of boxes, that this was this risk-free great trade. Somehow, obviously, we talked about some of the risks last show, listeners, how you can get caught. Uncle Mike mentioned some of those as well, how you can get caught. This is not a riskless trade. There is some risk to it. And now it sounds like he and Robinhood are locked in this battle because he doesn't want to pay for it, because apparently he never signed a stock loan or a margin agreement with them, and they're saying he's on the hook for that leverage. He said, I never agreed to the leverage, you just gave it to me. And so now it sounds like there's an interesting line. That's why that's why Robinhood decided to, shall we say, discontinue that strategy going forward. Oh, the growing pains of a new brokerage. How fun it is. But yeah, so it sounds like this guy somehow, I don't know, maybe he read it on a blog, or maybe he read a book. Hey, this box trade, I'm going to tie up $3,000 and I'm going to make all this money, and he ends up losing nearly 60. and then he tries to make Robinhood stay on the hook for it. So here's just some comments I saw. They're kind of fun. This guy SirSoliloquy says, what's hilarious is that with the way Robinhood is set up, Irony Man was somehow able to cash out $10,000 of Robinhood's money before everything disappeared. So Robinhood lost, this guy says hundreds of thousands, I don't know, but Irony Man gained hundreds of thousands. The other guy, the real 1-2, says, basically Robinhood screwed up. They were giving people leverage without margin, basically saying you were good for 200,000 in trades, and you only had 1,000 in the account, and no agreement for a loan or margin. The trader was short boxing, so at least this guy knows kind of what a box is, and lost. The actual risk to him was nothing since he did not agree to a loan. And he says Robinhood's on the hook for the losses. Robinhood has since blocked short boxing. So yeah, apparently, this, I guess, who knew boxes was such a hot thing, Mr. Rock Lobster, Mr. Last Emperor? The whole internet's blown up over boxes. Who had any idea?
Well, here's the thing with a box, okay? Somebody screwed up managing the box, because I can see him being assigned, maybe it was in Beyond, right? So he probably like, well, okay, I'm going to put this box on, and I can put this $5 box on for a $10 credit, right? And he's jumping up and down like, woohoo, I just made $5. And then like in a microsecond after he sells that in the money call, and beyond, he's assigned almost immediately because everybody's exercising every call they can possibly find in that stock. And now he's short the stock, but he's long the call. So, realistically, right, he can still exercise his call. So he shouldn't have been, from a risk point of view, you yourself as an investor, when you're assigned, as long as you have a spread position, you don't have different risk than you had before, because he's still long the call in the box, and just the fact that he's assigned a short call is not going to change the risk profile on a trade. So the thing is, he's still long the call against the short, so he should be okay unless Robinhood did something weird. What they could have done is they could have blown out his long call and then waited to cover the short stock that he was assigned, where there was a gap in that trade. They could have messed it up. Because from what I hear from Robinhood is, I don't think the guys that started Robinhood know a whole lot about trading. I don't know that for sure because it's all speculation on my part, but I think they actually need somebody that understands about like trading options and securities, because I don't know who their consultant is or something, and I'm sure they have a really cool app and it's free. But there's all these little trading things that you got to kind of know about.
Yeah, you're right. To me, these kind of losses makes me think that someone screwed up one of the legs, right? Like he got a little clever. He said, "Hey, I'm going to take one of these off, take this money. Oh, wait, it just gapped 80 handles in my face." That's what it feels like to me.
Well, I think Constantine agrees. It's like, you're long the call. How much can you lose? I mean, I could see him having to exercise a call that he's long, and he might, if he had to pay anything over parity for that, he's going to get drilled on that. But the short call goes to parity. It just depends on where, obviously what debit or credit he got on that side. The money was probably on the put side of that trade, not necessarily on the call side when they put it on. But it all works out in the wash. But they just made him cover the stock at a weird price, and somehow along the line they did not work out of the call, at the same time. Basically, those things should have been done together as a spread. So you make sure you don't have an open leg. But if you have this earnings, the stock's up $80, ouchie, right? So you see, like he's short a 5 lot or something, and they're a 10 lot, and the stock's up $80, and they close his long call, but not his short stock or something like that. I mean, I can certainly create the scenario where you lose a lot of money messing up a box. But I think it's the same reason why a lot of firms don't let people do time spreads in the SPX or something like that, because they have this in the money time spread. The front end goes out for cash, right? And then the risk of the spread changes drastically because your cash piece goes away. And now let's say all of a sudden you're long a call that's $100 in the money, and SPX drops 50 handles. And all of a sudden somebody's down a whole lot of money, and they're screaming at, whoever their broker is, "Why'd you do this to me?" And like, well, your short option went to cash and you're long. And that's kind of how it works. So, I could see a firm like, hey, Robinhood, I'm a lot cheaper than the $250,000 it probably would cost you on that if you need some real advice on how to manage all this stuff. But I'm sure we'll hear more of those stories.
I guess we need to start lurking in Reddit to find all these horror stories about who knew there were so many great options horror stories. Constantine, does this just, as a broker, as the guy running the strategy desk, does this make the hairs on the back of your neck stand up and you hear something like this?
It really does, guys. I totally agree with Andrew. I mean, it must have been obviously mishandled. I mean, the idea of having a box, let's say that he did get assigned short in a short call. The thing about it, if the stock, pops, right, like it did, from $100 to 185, and there are no shares available, that's kind of the side that, your margin clerks are probably focusing on. But, they're covering that side of the equation without probably talking to the client or without discussing it. And obviously then what happens? Well, the long call, was gaining the value. There probably was some time value involved with the long call, most likely. I'm not sure if there was or not. So, they said, well, we won't sell the call or won't exercise because we don't want to give that up. And then the stock drops, $50 or $60. So exactly, Andrew. It's just obviously a mishandling. Now, ladies and gentlemen, I can tell you that this would never happen at Fidelity because you have to have a margin agreement on file in order to do short options. No question about it. There's no way you can do short options without having a margin agreement on file. Those are the risks. And anytime that I speak with a client who thought that they have stumbled upon a pot of gold without taking any risk, I tell them to look in the mirror, splash some cold water on their face, and realize that there's really no arbitrage opportunities out there that will pay you 100% for taking no risk. So it's kind of a silly thing.
There you go. So also maybe an inspiration to upgrade your brokerage side a little bit to someone who maybe
Constantine wins.
Yeah, maybe someone who's heard of a box is a good thing to have when you're trading boxes. Who knew, right? Who knew boxes were this gold mine of debate and controversy and content? Who knew? Boxes. I guess apparently we've been out of the box loop for a while. Speaking of out of the loop,
we just don't sell boxes and stocks with 100% borrow.
Yeah,
we
that's
know that.
true. I need to up my quotient of Beyond Meat boxes. Then I'll start to understand what these people are talking about out here. I love it. All right, listeners, we're up against it here. We've been gassing on about all sorts of boxes here, so we're going to go to our final segment. We're going to do a combo of kind of around the block and kind of a wrap up. So let's just get right into that right now.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. We're going around the horn here. I'll do Uncle Mike for him because he's on assignment. Head on over to stcharleswealth.com. See what he's got going for you. Maybe he could set you straight on some boxes as well. I know he's got some thoughts on this issue, and I'm sure once he hears this, he's going to be like, oh, my God, I could do all this and that. So I'm sure he'll have some thoughts on it maybe on an upcoming show because boxes are apparently the gift that keep on giving. Let's go back to Constantine, the Last Emperor. Sir, what are you watching for the rest of this week? And also, if people want to hit you up at Fidelity about boxes or anything else, where should they go? What should they do, sir?
Yeah, most definitely. Any questions about boxes, I got you covered. Fidelity.com/options. Any questions really strategy related, whether it's technical analysis based or options trading, maybe, options trading based on your technical outlook. I'm definitely glad to help out. You can find us at fidelity.com/options by calling your service line, requesting an appointment with the trading strategy desk. We'll be glad to talk to you. I also want to take a moment. I know that I haven't been on the show for a couple of weeks, but congrats to Mark and Andrew, for finishing up the last week's event that you had. I certainly hope that it was successful in your view, and that you have many more to come in the upcoming years here. So, definitely something that you guys sounded like you were preparing hard for. So I hope it paid off.
Yeah, well, look at all that love from the Last Emperor there, sir.
I know, I love this guy. Longo, you can learn a lot from the Last Emperor.
Like how to manage a good box spread, apparently.
In terms of what I'm watching, guys, I just a couple of things. I'm looking at Broadcom, AVGO, going into earnings, going to report right after close today. I know that we're winding down the earnings season, obviously, so that is a name if that's something that you're looking for. On my last check, was pricing in, a pretty good straddle. I think it was like $16, $15.70 or so going into Friday. Stock trading 278.80 right now here, with a couple to go. And then, of course, next week, on Wednesday, waiting for that 2:30 Fed presser. I think it is definitely going to be a market moving event. The chances are, like I mentioned earlier, the Fed funds futures are not pricing in a cut this month, but definitely they're anticipating probably two by the end of the year, and the first one coming in July. So we'll see how their rhetoric is structured in the delivery. And the most recent economic reports, I kind of was thinking and talking to my clients for the past week, saying, what was the last time you remember economic reports, PPI, CPI, ISM numbers, weighing so much importance, sort of, right, in financial media as a whole. I mean, everyone seems to be paying attention to it, probably because that tends to be reflected into the expectations of what the Fed is going to do. So we'll have to wait and see just a couple of days.
Yeah, we were just talking about that on Vol Views last week about, who knew that numbers, they used to be so popular, late 90s, and they kind of fell out of favor. And then maybe coming back again a little bit, which is certainly interesting. Give us a little bit of some action on non-farm Fridays at the very least. Mr. Rocklops, the same question for you. What are you watching for the rest of this week into the weekend? And also, people want to follow up. Hopefully they heard our recording from the Option Pit Pro Trader Summit. They want to learn more. Maybe they want to call you up. Maybe you guys need to do clearly, Mr. Rocklops, you guys need a webinar on boxes. This is clearly the new hot thing, sir.
Yeah, we could do a free webinar on boxes next week for people. You should go
straight to that Reddit thread and post a link saying, "Hey, we're doing a webinar next week on this. We'll explain all this crap for you." And I'm guessing you'll get a lot of people on that.
Yes, I know. I was trying to get to the Reddit thread on your notes you sent me, but I'm kind of stuck there on hobby drama or whatever. But anyway, if you have the full link, I'll look at it. But we had a great event. I think people had a very good time, learned a lot of stuff, and we'll have one next year. So it was a really nice time. The second part is I'm watching the VIX go nowhere. And also, on this oil thing, I find curious, mostly just because the second time that Iran has tried to rattle the sabers. Right now, the oil is basically unfazed. I think, vol's actually down in USO. 20 years ago, somebody did something naughty in the Persian Gulf. I think crude would be up $10. So, the supply picture is different now. And basically, the Persian Gulf, if they stop producing, any kind of chunk, just somebody else picks up the supply. So it's a little different thing. There is still geopolitical risk, but I'm watching VIX go nowhere and just looking for opportunity, getting by all this stupid China Fed lowering rates and a 3% growing economy and kind of stupid crap like that. So that's it. It's a little bit grumpy on the vol front for me. That's all I got to say. So just, you watch stocks go up a little bit, I guess. That's it.
Yeah. Sometimes when it's sticky, you can get grumpy. Sticky vol makes the Rock Lobster grumpy. Listen, make him not grumpy. Head on over to optionpit.com. Sign up for his forthcoming box seminar. By the way, Mr. Rock Lobster, I sent you the link there so you could see the full Reddit rabbit hole. Tread lightly. Fools go where angels fear to tread in the Reddit landscape. But interesting stuff nonetheless. And hopefully you found this show interesting. And hopefully if you're sticking around, if you're listening live, we'll see you back here in about 23 minutes for all that crude vol and everything else. Otherwise, we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.